India's real GDP is projected to grow between 6.5 to 7% in 2024 to 25. The Indian economy recovered swiftly from the pandemic, with its real GDP in 2024 being 20% higher than pre-COVID 20 levels. This was stated by Economic Survey 2023 to 2024 by Union Minister of Finance and Corporate Affairs Nirmala Sitharaman. The survey points out that domestic growth drivers have supported economic growth in 24 despite uncertain global economic performance. It also adds that during the decade ending, India grew at an average annual rate of 6.6%, more or less reflecting long-run growth prospects of economy. The survey, however, cautions that any escalation of geopolitical conflicts in 2024 may lead to supply dislocations, higher commodity prices, reviving inflationary pressures, and stalling monetary policy, easing with potential repercussions for capital flow. This can also influence RBI's monetary policy stance. Global trade outlook for 2024 remains positive, with merchandise trade expected to pick up after registering contraction in volumes in 2023. The survey highlights that leveraging the initiatives taken by government and capturing the untapped potential in emerging markets, exports of business, consultancy, and IT-enabled service can expand. Despite the core inflation rate being around 3%, the RBI, with one eye on withdrawal of accommodation and another on the US Fed, has kept interest rates unchanged for quite some time, and anticipated easing has been delayed. The economic survey says that India's economy showed resilience to a amount of global and external challenges as real GDP grew by 8.2% in 2024, exceeding 8% mark in 3 out of 4 quarters of financial year 2024. It has been driven by stable consumption demand and steadily improving investment demand. The survey underlines that the shares of agriculture, industry, and service sectors in overall GVA at current prices were 17.7%, 27.6%, and 54.7%. GVA in the agriculture sector continued to grow at slower pace, at erratic weather patterns during the year. An uneven spatial distribution of the monsoon in 2023 impacted overall output. Within the industrial sector, manufacturing GVA shrugged off a disappointing financial year 2023 and grew by 9.9% in 2024 as manufacturing activities benefited from reduced input prices while catering to stable domestic demand. Similarly, construction activities displayed increased momentum and registered a growth of 9.9% in 2024 due to infrastructure build out and beyond commercial and residential real estate demand. Various high-frequency indicators reflect the growth in service sector. Both goods and service tax collection and issuance of e-way bills reflecting wholesale and retail trade demonstrated double-digit growth in 2024. Financial and professional services have been a major driver of growth post the pandemic. Gross fixed capital formation continues to emerge as an important driver of growth. By private non-financial corporations increased by 19.8% in 2023. There are early signs that the momentum in private capital formation has been sustained in 2024. As per data provided by Axis Bank Research, private investment across consistent at over 3,200 listed and unlisted non-financial firms has grown by 19.8% in 2024. Apart from private corporations, households have also been at forefront of capital formation process. In 2023, residential real estate sales in India were at the highest since 2013, witnessing a 33% growth, with total sale of 4.1 lakh units in top 8 cities. With cleaner balance sheets and adequate capital buffers, the banking and financial sector is well positioned to cater the growing financing needs of investment demand. Credit dispersal by scheduled commercial banks to industrial, micro, small, medium enterprises and service continues to grow in double digit despite a higher base. Similarly, personal loans for housing have surged, corresponding to increase in housing demand. The survey states that despite global supply chain disruptions and adverse weather conditions, domestic inflationary pressures moderated in 2024. After averaging 6.7% in 2023, retail inflation declined to 5.4% in 2024. This has been due to the combination of measures undertaken by the government and RBI. The Union government undertook prompt measures such as open market sales, retailing in specified outlets, timely imports, reduced price of LPG cylinders, and implemented a cut in petrol and diesel prices. RBI raised policy rates by cumulative 250 bps between May 2022 and February 2023. The survey says that against the global trend of widening fiscal deficit and increasing debt burden, India has remained on course of fiscal consolidation. The fiscal deficit of Union government has been brought down from 6.4% to 5.6%. According to provisional actuals, data released by Office of Controller General of Accounts says this. The growth in gross tax revenue was estimated to be 13.4%, translating into tax revenue of 1.4. The growth was led by 15.8% growth in direct tax and 10.6% in indirect tax. The survey adds that 55% of GTR, that is gross tax revenue, occurred from direct taxes and remaining 45% from indirect taxes. The increase in GST collection in e-way bill generation reflects increased compliance over